know. Shawty got low, 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 low. Everybody. Apple bottom jeans, boots with the fur. Oh, the old glove was looking at her. She hit the floor, next thing you know, shawty got low, 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 low. Everybody! Apple bottom jeans, boots with the fur. Oh, the old glove was looking at her. She hit the floor, next thing you know, shawty got low, 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 low. Everybody! Apple bottom jeans, boots with the...
Hello and welcome to the Closing Beat, everybody. Happy Monday to you. How you doing out there? All's good? Welcome, Mark, Eloy, Marcus. We're giving it a chance. You know, we're coming back. We're going to try the live thing. It's raining cats and dogs out there. It's all good. We're doing our thing. Cody, are you ready over there? What was it? Carol. Is it the winner guess today? Was it Carol S and Ted S?
Oh, switch away from my screen.
Well, who? So the guess the Dow was. It says Carol. Oh, that's the leaderboard for this week. That's right. No, my bad. Okay, well, but Carol's also. That's what I was asking. But was it Carol S with Ted? Is that them? Ah, that's cool. All right. I love when my clients win. I don't like when Eric's clients win. Anyways, welcome to our show here. Hope you're having a great week so far. We've got so the markets are kind of like, hey, wait a second, because as we get through the week and into next week, it's going to be really, really busy. Today, what we had is the big names held everything back. And honestly, I just did a basic heat map here just to show you, because this is the market today. You could have done this really at any point throughout the day. Wow, everything looks green. It's called a heat map. So basically, we're plotting every single stock, and then the performance you can tell by how green it is or how red it is, but then the size of the box is how much impact it has on the market. So I look at this today and I'm like, gee, I wonder why the market's having a hard time, right? Microsoft, Apple, Nvidia, Google, or Alphabet, Meta, Tesla, Amazon. What? What are you laughing at?
You just said.
Oh, Eric's client's fighting back there? Well, I got to fight for my people. You take it for what it is. Have it up with Eric. I don't know what to tell you. Maybe he'll give you some inside scoops. Anyways, that's why the market's not doing anything. When you have 4, 5, 6, 7, and I'll throw the 8th one in there, of those stocks that control the market, they're really the biggest sort of voting power in the market, if I want to use that word. The rest of these can all be green. And there was a lot of good stuff going on around the market, which was honestly pretty impressive, because if we go over here, if you look at the stock market itself, without those 7 stocks, would have been a really good day. And that's broad participation. The key thing there is we had broad participation in almost everything. Utilities was your best performer last week, so it's okay. It took a little break. But we had broad participation in everything except the big names. So if we can just get them to just have a decent day, we've got ourselves a pretty good recipe there. Now, we've got, where are we going with that? I do want to point this out. Overall, though, so obviously, nice little rally to break out of this area here if you're following the market on a daily basis. But overall, the past couple weeks is sort of a pause, right? Some up days, some down days, but no real progress. If you just pick a spot and say, right here, if I invested on that day, I'd have a very minor gain. Okay, right here, if I invested on that day, I'd have a very minor loss. You see what I'm saying? So just right in there, there's not a whole lot going on. Now, we have inflation numbers coming out on Wednesday. Well, so we have headline inflation consumer inflation numbers coming out on Wednesday, and then producer inflation numbers, or the PPI, coming out on Thursday. I'll just throw this out there. I'm going to get a comment. Somebody go ahead and just get it over with and pick on me for this. But if you do the math on the inflation number, I'm going to lay this out real quick. if the month over month inflation number, which is always the first thing reported, they'll say month over month, I think last month it was 0.1%. In other words, inflation grew from last month 0.1%. If that number that they report month over month comes in at 0.3% or less, then the headline inflation number would actually have a 2 on it. It would be, let's say if it comes in at 0.30% month over month, the headline inflation number will actually be 2.95%. So there's a good chance that you see that Wednesday, right? Like on Wednesday, we could find out that that happens. If the number is 0.2% month over month, then your year over year inflation number would be 2.84%. Doesn't sound like that's possible, right? Like, well, that was high inflation. Working our way down on the headline number. If it is 0.1%, then the number would come in at 2.74%. So just to give you an idea, when you get there, or Wednesday when we get there, if inflation is 0.3, 0.2, 0.1 or less, then the headline number will have a 2 in front of it. If it's 0.4, yeah, anything higher than that, which I don't know how we're going to come up with that, but let's just say it happened, then you still have a headline inflation number that's higher. That doesn't matter though. The market is going to respond to the core inflation number. And unfortunately, that's still plus 5%. That's just going to have a 5 in front of it. It'd have to be a big drop. I don't know how we'd get it under 5. So remember, because the Fed says, well, we're really interested in core inflation being down in that 2% range. So there'll be some good news, some celebratory stuff on maybe TV, but in reality, the Fed's not really looking at that. Anyways, looking around here, Russell 2000 killed it today. That small cap rebalance that took effect there towards the end of last month, we talked about it, we led you into that. That's all continuing. People want to be in the small cap space right now. The biotech's kind of helping you out there, so you got to be into that sort of thing. I'm not, so I don't really put a lot of sort of faith into this current last couple day rally there. The NASDAQ naturally struggling a little bit today. Why? Well, that's an easy one because they're right there. See, those are all NASDAQ names. It used to be that if there was a 4-digit or 4-character name, that was a NASDAQ stock. If it was a 2 or 3-character name like AMD or Colgate or Home Depot, then that was New York Stock Exchange stock. So that's not always true these days, but you have Apple, Microsoft, Nvidia, Alphabet, Meta, Amazon, Tesla, all of these NASDAQ stocks, right? So if you look at the market today, you go, oh, well, they suck today, so that means that that's going to suck as well. Speaking of tech stocks, I'm going to just happy to be here live, right? So tech stocks, a little bit of a disconnect here today between tech stocks and interest rates. Interest rates fell a little bit. The rate. Prices went up, interest rates went down, right? That's typically good news for tech stocks, but what do we have? Well, the big tech stocks that didn't really help, didn't do anything there. Normally, that would be a bigger deal. We'd spend more time on that. That's a lot of early in the quarter adjustments, as well as earnings positioning, because got earnings coming up, right? So we got earnings coming up starting this week. You'll have JP Morgan, bank stocks. Those are going to be the first. Citigroup, Wells Fargo, those will be the ones to report there. 80% of the total market cap, here comes a lesson, 80% of the total S&P market cap is going to be reporting in the next 3.5 weeks. We have this week, next week, the week after, and a little bit of the rest of the one. Which one do you think is going to be the wildest week of all of them? How could we tell? Well, very easily, we could go over here and say, wow, Microsoft is a large, valuable company. Its market cap is considerably larger than NextEra Energy, or one of these little tiny guys down here. Okay, when do they report? We can do that for every stock and then outline it and say 5% of the S&P's market cap will report this week. So if all 5% of that value reports a horrible, just nasty earnings season, it's not really going to move the market. Next week, if all 12% of the S&P's market cap that reports doesn't do so well, okay, it could be a blip on the radar, it could be okay, but it's not going to cause disaster or be a monster rally. It's this week right here, where basically half of all the value, trillions of dollars, not quite trillions, but lots of money is going to report. That's your wildest week right there. It's easy to see because in the S&P, half of the whole value of the S&P is going to report earnings. So it's kind of cool to see that. And you can even take it further if you want to do that. If you want to look into the individual sectors, you could tell which sector is likely to be the most volatile. Can you guess which one it is? It was definitely in this week. But you look down here, say, uh-oh, tech. There's your big names reporting right there. So you don't expect wildness in tech over here. You don't expect anything here for the rest of this week. There's nobody reporting. It's not so bad here, but bam, right there. You're going to go somewhere. That's probably not the week to go somewhere if you're in tech stocks. So making a long story out of something that was really easy and simple to break down for you. Earnings-wise, utilities are expected to have the best performing season, the earnings season for Q2. And energy, the worst. Expecting to see about a 50% decline in earnings. I wasn't showing you there. So utilities and then energy, the worst one there. Here's the thing, though. You don't run away from energy because of that. So energy is, they call it revisions. They've already revised their earnings lower, telling you, this is going to suck. I don't know what to tell you. It's just going to be bad earnings. They already did that. So if they just do a little bit better than the worst case scenario that they presented, it'll be fine. So I'm not really worried in that. Main focuses, if you're going into earnings season and you're going to trade, you're going to be interested in which stocks will be more volatile or you want to add or whatever to your portfolio, main focus is total margins. Does the company still have the profit margins that they had? Number two is going to be the impact of the higher interest rates, banking rates, borrowing rates, forward borrowing rates. Obviously, it's going to eat into their earnings. How much so? There'll be a lot of talk of that. And then probably just for fun, the use of AI. You know AI will be the most spoken, typed, whatever word through earnings season. No doubt. Come on. Do you know what AI is? Do we need to go over that? It's this new term. They're just throwing stuff out there. I don't know. I have to look into it, Something new the kids are into. I don't know. Just kidding. Hey, Snapchat. Snap. Wall Street Journal says, don't forget about these guys, right? They're gaining traction. They're getting more creators back to their platform. Cody, do you use Snapchat still? So not really. Yeah, that's what I've been hearing there. But I don't know if it's like my generation's Facebook where it's like, it'll always be there because I got so much history with it. Probably not. No? Okay. No. Anyways, that was in the news there. Other stocks in the news. Taiwan Semiconductor says 11% of their total revenues down. You care now to jump in? 11% of revenues down year over year. It's not a big deal. They are killing it there, second in line with the whole AI thing. Carl Icahn, fancy accounting here. If you own a public company that operates in the way that they do as a limited partnership, it's like, all right, this was creative. Nobody gets away with what happened regarding this company, but Carl Icahn. So if you don't know, I'll give you a brief one. This whole chaos right here is caused by a company called Hindenburg Research. They put out an article going, whoa, we figured out that 60% of these shares have been pledged for a loan. In short, if you are one who is fortunate enough to have a brokerage account that is large, you can, and you own shares of Apple, let's say, you can go to the brokerage firm and say, I will give you these shares to hold on to. Don't sell them. I want to keep them. But will you give me a loan against my shares? And they'll say, yes, absolutely. Oh boy, it's getting kind of loud. They'll say, sure, yes, we'll do that. So for example, you have $100,000 of Apple shares. You can go to the brokerage firm and say, may I borrow $50,000 without selling my shares? They'll say yes. Okay, well, that's normal, not a big deal. Mr. Carl Icahn says, wow, we have all these shares, people that have invested in this company. What if we took 60% of it and we got a loan against it? Well, even that's not a problem. The problem is he took a loan in the business name and then just loaned it to himself. Oh, like billions of dollars, almost $4 billion. So they worked out a deal basically to get that all off the books so that in the event this stock falls, it can't cause a margin call against the shares that he's loaned. Sorry if that gets a little confusing here, but it can't cause a margin call, which means the company can't be in trouble for the maybe excessive loans, you could argue, that Mr. Carl Icahn has. That's it. Helen of Troy. This one is earnings. These guys were the last, absolute last to report on earnings there. All was good there. These guys own, it's one of those brands that own brands. Revlon, Braun, Vicks, other names like that. They beat by cutting costs, just lowering their total inventory if you're into that kind of stuff. There you go. And lastly, Carvana. So Carvana here, making a comeback, and I'm happy. I like this here. I like Carvana. Cox Auto Survey, by the way, did a survey that said 87% of people prefer to buy their car 100% online. That's good news for Carvana. And interestingly, they published a list of their most sold electric cars. Okay, yeah, number 1, Tesla Model 3. Number 2, Nissan Leaf. I don't know what that is. No. Number 3, the BMW i3. Not sure I know what that is either. Chevrolet Volt. I've heard of that one. I don't know that I've seen one. Tesla Model Y, Tesla Model S, Volkswagen e-Golf. You guys know? I don't know what these are. The Chevy Bolt. Oh, yeah, I've heard of that one. The Mustang Mach-E. I like that one, actually. I've seen that. And something called the Chevrolet Spark. So, I don't know. It's kind of interesting just to take you off the stock stuff for a while. Nonetheless, stock is killing it if you were able to handle some of the nastiness there through COVID. I recognize Tesla. I recognize the Mustang Mach-E. I've seen a few of those. I think those are pretty cool looking. I didn't know they were 100% electric, though. So, I don't know. Take your questions if I can find them here, and then I'll run away. This is really coming down now. When you can hear it through our ceiling here, it's pretty impressive. Yeah. I am biased, Mike, a little bit against Carvana. Yeah. But I was talking about really, the cars that they sell. It's kind of interesting. Hey, Giovanni, you bought the Qs, 14, 365 calls. Okay, July. Let's go over here, so I'm with you, Mr. Options Man. 365 calls. This morning, and you sold one. Hold on more for 370. Okay, cool. Yeah, but remember we were talking about a minute ago. You now know that the rest of the market is there and willing to participate. If those 7 stocks even just have a tiny little update tomorrow, that's enough to get the Qs back up around 370. So I don't have any reason to say, oh no, that's trouble, All fine. Yeah, we got the thunderstorms. Are they building over there too? Are you in Orlando? It's just that time of year. They come through. 10 minutes from now, it'll be sunny again. It'll just be water on the ground. Which is good, because I'm old enough now where I'm like, plants need some water, man. Yeah. AT&T, look at good entry. I don't know why you would say now. No, wouldn't be for me. You're on the way down here in the short term, momentum to the downside, but it's not extended. I'm all for buying something that's extended, but you're just kind of getting this move started here. So, yeah, not for me. Tom says, welcome back. You sold open at Morgan Stanley this Friday, 84. Hey, good job. Okay. Well, you're going to have some fun with the, you're obviously doing this to hold through earnings, collect that extra premium there. You sold at 84. I don't see, I'm not sure what you got that for, but obviously it's still very close. I have no problem with that. No, expected move is, do we know what the expected move is? Where did they go? It's at like $2.20 or something. As long as you collected somewhere in there, I'm cool with that. It's an earnings play. Obviously, we know what you did there. So you're in for the ride. What do we think about the merger of TD and Ameritrade and Schwab? I have no problems with it. I don't know much about Schwab, like and how they operate. I know a lot about how TD did operate. I wouldn't assume that they would do anything to frustrate you. And you're going to get paid more, by the way, on your, I read about that over the weekend. So do you guys know what a sweep account is? You have money that's invested in your brokerage account, and inevitably you have cash that just sits there. You just couldn't buy enough shares or didn't want to, so there's always a cash balance. That money sweeps, they call it a sweep, into essentially a savings account, money market type account overnight. And you get to participate in some of that interest. Well, Schwab has a really competitive rate for that, whereas TD was just kind of a wash. You never really made any money. They kept the difference there. Anyways. Under Armour getting some support for bounces. Yeah, maybe, but I saw everybody commenting all the analysts today were talking more about, so real quick, I won't take a lot of your time. There's the question of student loan repayments starting and the impact that that will have on retail. And so basically we break down all the retail and you can figure out sort of the hit that each company would take based on the student loan payments, about $70 billion if you annualize it. And so everybody's doing that study right now. Your JP Morgan analysts, Goldman Sachs analysts, that's kind of what the talk is right now. And everybody was focused more on the fact that Lululemon would be more the one to be able to withstand that with taking no hit at all. So if you are looking for something, I'm not telling you to buy it. I'm just saying that's what I see going on. I haven't spent a lot of time on the details of it, but maybe we'll make that like a little class. Bobby, I like that name. Always like the name Bobby. Do you teach your clients covered calls and cash secured puts? I really want to start going with those. Yeah, I have. They're in our library. We've done it as Wine and Wealth classes. We've done that. We did it quite a bit and started really getting into that right before COVID. Then the world kind of freaked out and we're like, okay, we need to focus on our stuff again. But anytime the markets get a little bit slow, I'll use that as a talking point and say, okay, well, let's take some of the questions I've gotten and really break it down over on the blackboard there. Yeah. All right. Seems like it worked. All is good? Can't hear you well, though, right? Okay, so tomorrow, I'll give you a heads up, right? So Cody likes to get a heads up. Tomorrow, I would like to talk about Elon Musk and Mark Zuckerberg head-to-head there. Full presentation Cody's going to have for you tomorrow. I just think it's very cool. All right, we'll talk about that tomorrow and a lot more as well. Remember, inflation numbers on Wednesday and the more important and interesting numbers on Thursday, and all kinds of stuff getting started with earnings on Friday. So a lot going on. Hang on tight. We'll see you then.